All right, in today's video, I'm going to show you where I think the metal sector is headed this year, and I'm going to go through the setup, what the banks are going to do in the coming weeks that is going to set up the average retail trader to basically to get robbed. So to begin with, I think 2019 we're going to finally break out of this basing pattern that we've been in for 2.5 years now. But we're setting up, this is just a classic tactic that the banks use, and basically they have to. The reason being, it's not the same for a big trading entity like that. They can't just click a mouse and enter positions like any of us would do. If they're trying to enter a big position, let's say they're trying to get into a 10, 20, $30 billion position, you can't just start buying. The problem is that that kind of an order will cause price to run against you, and you may start your order here at $21, but by the time you've finished buying that order, you're probably going to be up here somewhere around $25. So you've created a lot of slippage trying to get into that order. So what banks do to cure this problem is that they will manipulate price through in the case of long orders, they'll manipulate price through a breakdown area. And the reason being is these obvious support zones will have a lot of stops right below them. So like here, for instance, with just multiple times price bounced off this $21 level. And so there's just tons of stops below this level. That's liquidity. And so here we have a perfect example. The bottom last year, we've got a major support zone right here at just a little above $18. And it's obviously there are a ton of stops right below that level. Well, if you're a bank and you're anticipating price is going to make a bottom and then turn in the other direction, and you want to enter, like I said, let's assume just say a $30 billion position. You're not going to be able to do it by just buying right here at support. Everybody's going to be doing the same thing, and you can see exactly what happened here. A lot of people bought right here at this support, and we get a nice little bounce. And the problem the bank would have is if they're trying to buy along with everybody else, then price is going to go up considerably, and by the time they've finished off their order, price is going to be somewhere here around $21, $22. They're going to have a lot of slippage from their initial purchase at trying to buy at 18. So what they want to do is they want to run those stops. As I said, there's going to be a lot of stops right below this pivot here. If they can run those stops, it's going to bring a lot of selling into the market, and that would allow them to enter that big $30 billion position as everyone else is selling. And you can see this is exactly what happened. They run the stops right here, and everybody panics and sells. That allows the banks to get into their large positions, and then away we go. Now, I think this year is going to be a much better year for the metals. This was a fairly difficult rally to trade. There was a lot of volatile swings back and forth. I think this year it's going to be much easier, but you can you can see what's happening. The first thing is, in order to get into a very large position, and I think the banks are going to want to get into a big position, because I think we're going to test these baby bull highs during the next intermediate rally. So they want to create as much selling as possible so that they can enter extremely large positions as close to the bottom as possible without moving price up and and causing a lot of slippage as they get in this big position. So in order to do that, they're going to have to run some stops. Now, the first key is they don't, first off, they don't want to allow price to get all the way to the top of this range. This in itself is going to put a whole bunch of stops right below this range. If price didn't get up to here, then most traders are already a bit nervous. This didn't really go as far as they were expecting, so now they're going to protect their position by putting a stop right below this obvious support zone here. And what's going to happen, almost certainly what's going to happen, is that the banks are going to manipulate price and they're going to run this stop below, this is about 2050, something like that. And I suspect they're probably also going to run price below this pivot right here at just a little above $20. That's going to convince the hedge funds, the retail traders, that this move back into the consolidation zone was a fake out move, and that price is breaking down out of the consolidation, and so this is a failed move back into the consolidation zone, and now we're headed down. We're going to break down and come down, and we're headed for the bear market lows. That's not what's going to happen, and you just have to understand why this happens, and be prepared for it. So I think traders should expect that price is going to break back down out of this consolidation zone, probably going to break below this pivot right here, and it's a manipulated move, and it's done to run stops so the banks can get into position, because they want to have a big position on for the run up to these baby bull highs, which is, I think we're at least going to test that sometime in 2019. So in order for them to enter multi-billion-dollar positions, they need to create liquidity. This is how they're going to do it. So understand what's going on over the next week or two, when price almost certainly is going to break back down out of this consolidation zone. It doesn't mean that the market, the metals market, is broken. This is a manipulated move to allow the banks to get into positions, and you can either try and pick a bottom down here, and try and enter along with the banks, or you can just simply sit on the sidelines and let them, play their tricks. And then once price gets back up into this consolidation zone, then that would be your buy zone. And I would also suggest, let me shrink this chart just a bit. All right, so let me show you in a little bit, on the daily chart here, what I think is almost certainly going to happen. So here's that support zone right around 2075, 2050. This is that consolidation box. The banks are going to want to break this. To begin with, the hedge funds are going to be gunning for this gap right here. So that's going to be one draw. Price, they're just going to be piling on shorts, trying to fill this gap. And then I suspect price will be manipulated below this support zone here at 2025. There's going to be a lot of stops, not only below this consolidation box, but probably even more below this pivot. So they're going to gun for that. They're going to try and manipulate price below that level. That's going to cause a lot of selling. That gives the banks, the initial entry into the market, and this is where you're probably going to see really heavy volume in the ETFs, especially the triple ETFs. We'll get like a 20 million share day on Nugget or JNUG to the downside, and there's somebody that's buying every all those shares that the dumb money is selling, and that's your clue of what is happening here. And then there's usually one more little fake out. So as the banks start to enter these big positions, price will that'll put a floor in the market, and then we'll turn to go back up, and then you'll get the retracement traders. They're gonna they're gonna believe this breakout is the real deal. So when we come back up into or to test the consolidation box, maybe we go a little bit back into it, and then we fall back out of it. This is where the shorts are gonna pile into the market, thinking that expecting that this is a retracement and that we're headed back down. So this is where the shorts are going to pile in again. And as the shorts are piling in, more selling, more shares for the banks to increase their position. So I would expect first off, a breakdown below the consolidation zone, probably a breakdown below this pivot, and then a move back up as the banks get into their positions. And then as the retracement traders, the shorts, try and press this trend, this will give the banks their second opportunity to load up on longs. And then at that point, I think we're done. We'll get back into the consolidation zone, and ultimately, let me switch over to that longer term chart again. Ultimately, we'll probably test this level during the first daily cycle, and then during the second and maybe third daily cycle, I think we're going to at least test the baby bull high. So I'm pretty sure the banks see this this opportunity as well, and this is the strategy they're going to use to get into multi-billion-dollar positions to take advantage of what is coming in 2019. So understand what's happening, why it's happening, and then follow along behind the train instead of standing on the tracks in front of the train.